Hi, this is Mike Larson from Money and Markets TV. We've learned a few things about the real economy in the past few days, and none of it's good. First, retail sales fell 0.2% in May, following a similar lousy performance in April. Strip out auto sales, and you get a drop of 0.4%, the biggest monthly decline in 2 years. Back then, the Dow Industrials were trading around 9,900, about 3,000 points below where they are now. Meanwhile, the Institute for Supply Management's Manufacturing Index came in far below estimates, hitting its worst reading since July of 2009. And the services sector wasn't much better, slumping to its lowest level since January 2010. Overseas, China's manufacturing activity fell to a 7-month low, and in the Eurozone, unemployment just hit 11.1%, the highest monthly reading since officials began tracking it in 1995. Care to guess where the Dow finished that year? Try 5,100. And last but not least, we got another lousy report on employment here in the US, with just 80,000 jobs created in June. This underscores the labor market continues to be a struggle and a problem for the US economy. Of course, I'm not saying the blue chip index is going to get cut in half or lose 3,000 Dow points in the next few weeks, but this news does underscore the massive economic threat that we're facing. In fact, I don't think it's a stretch to say that this is an economic slowdown the likes of which we haven't seen since 2008. So the key question is, why haven't stocks tanked yet? Well, it's because for some reason there is still a belief on Wall Street that somehow, some way, fiscal and monetary policy is going to come riding to the rescue. I disagree. I've said for a long time that policymakers can paper over fundamental problems for a little while, but in the end those fundamentals always win out. We saw it in the first phase of the Great Credit Crisis a few years ago, and I believe we're seeing it again now. In fact, the similarities are downright eerie. That's why I believe this is a battle that policymakers simply cannot win for more than a few days or weeks. The numbers are just too daunting. For example, Greece, Ireland, and Portugal have already received 386 billion euros in bailout funds and commitments. And now Spain is requesting up to 100 billion euros more. Cyprus is asking for its own handout, and some reports suggest Slovenia could be next. If that happens, folks, 6 of the Eurozone's 17 member nations would be on the dole. It doesn't take an economist or a PhD to know that's unsustainable. One lesson I learned during the first phase of this credit crisis was that you have to look at rallies like the one we just got as gifts. They offer great opportunities to buy inverse ETFs more cheaply than you could otherwise get them, or to also unload any vulnerable stocks you may still own. A couple things could make me change my view to a more positive one. First, a grand plan from policymakers that actually attacks the underlying sovereign debt rather than papering over it. And second, a real washout panic, one where investors dump anything and everything. In the absence of those two conditions, I think you should ignore any talk of successful fixes in Europe or predictions that central bankers will somehow save us all. It's just not going to happen. I'm Mike Larson for Money and Markets TV. Thanks for watching.